Hello guys, welcome to another weekly breakdown video. Today I'll be breaking down the last week of March, as you can see, starting from 24th of March. And before starting the weekly breakdown, let me show you the news. Monday there was a whole bunch of PMI news, whole day. Tuesday there is no news. Wednesday CPI. Thursday there is the dollar news, and Friday there is GBP and USD both news. So it's going to be tricky. So on the weekly time frame, you can clearly see we mark the supply, demand, fair value gap, market structure shifts, targets. You guys know, and I watch for the bias on the weekly time frame. And according to the bias on the weekly time frame, I anticipate the trade on the lower time frames, like the H4, the weekly profiling being bearish. I anticipate Monday, Tuesday to go up, make the high of the week, go to the downside, make the low of the week, and then reversal. This is the bearish classic expansion weekly profiling, but I trade a little bit different, and that's totally fine, and I'm seeing results in that. So I don't need to trade exactly as how other people trade, because that's not how it should be. You gotta trade according to how you understand the markets, according to how you have backtested, right? So here we can clearly see on DXY it is aligning. On DXY the bias is aligning with the weekly bias being bearish on GBP USD and bullish on DXY. On DXY I'm targeting this weekly fair value gap to fill, and yeah, so the weekly bias are aligning, and anything that's aligning with the weekly bias on the daily time frame would be a good trade, to be honest. So now going on the daily time frame, we can clearly see on Monday, without wasting any time, I will not waste any time, I will only talk about facts in this video. So here we can see higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So this supply zone is valid here because of this break of structure, supply, demand, fair value gap, market structure shifts, and the daily bias. So everything, the same thing, I do the same thing on the weekly, on the daily, on the 4 hourly. It's just the time frame difference, and each time frame is used for each work, right? So now according to how this Friday candle closed, on Monday I decided to take a trade. You guys know, right? I trade on Mondays whenever the weekly and the daily bias are aligning on Monday. That is when I decide to trade on Mondays. So on GU the weekly and the daily bias were aligning, whereas even on DXY the weekly and the daily bias were aligning, being bullish. So on GBP USD I was looking for a sell on Monday, and on the 4 hourly we can clearly see the market structure shifted here, but I didn't mark this market structure shift, the change of character, because it didn't happen with huge volume and it was a wick, so I don't consider that. So that is when I go to the H1 time frame. On the H1 we can clearly see I waited for the Asian range to close, and after the Asian range close, after I have put this session indicator in my chart, bro, the trading has become so much simple, bro. It can be so much simple if you have systems in place and if you know what you're doing, man. It's not hard. Here you can see I was looking for a trade after the Asian my bias was bearish, right? My bias was bearish. The Asian high liquidity got swept, the New York high liquidity got swept. So much of liquidity got swept here. The Asian high liquidity sweep, New York liquidity sweep, and then the M15 supply zone, which was made not in our session, got mitigated, and then that is when I was looking for a trade here on the M5 time frame. So this trade I have explained it thoroughly on a different video, so you can watch that if you want. And if I start to explain this trade deeply, then it will take a very long time. So yeah, so London session was literally to the upside, New York session came to the downside, and now going on Tuesday. So Monday was a loss. This trade I have journaled. This trade was a valid trade. I would have taken this trade any day because I trade according to how I understand the market. So even if it's a loss or win, it's a game of probability, so I will let the probabilities play out. I will not let my emotions come in the chart, right? So on DXY we can clearly see on Monday it was bullish, closed as bullish, and on GBP USD on Monday it closed as bearish. So going on Tuesday I was now looking for sells again, because until and unless the price shows me that it wants to reject and go to the opposite direction, I am trading with the trend, with the bias. So going on Tuesday I was looking for sells, and also there was no news on Tuesday. So let's see, the bias was also clearly bearish. And yeah, on the 4 hourly time frame there was no market structure shift because the price didn't do that. The previous week low has been swept. On the 4 hourly time frame the price has found some sort of resistance from some sort of supply right here, and on the H1, when I go to the H1, that is when the business happens, right? So on the H1 time frame we can clearly see there was a H1 demand, H1 supply zone. I waited for the Asian range to close, and after the Asian range closed, the price literally went to the downside without us. So Tuesday was a no trade day for me because the price literally went without us. It was a continuation model, and I didn't took this trade because the Asian high liquidity never got swept, and I can guarantee you even on Euro USD the Asian high liquidity didn't got swept. So it was just not our setup, and the move did happen. The bearish bias was correct at our time window. I don't care what happens here. I care about what happens at my time window, right? So this time window the market literally gave us the move like I anticipated, but I didn't do the trade because the setup was not there, and that's part of the game, bro. So now the New York high got swept, Asian high liquidity got swept. The H1 demand, H1 supply zone that I was looking to trade from did got mitigated. This was a New York session trade. It was a beautiful trade on New York session on GBP USD. So these are the days whenever London doesn't give you the move and there is a supply zone, potential supply zone to trade from, that is when you look for New York session trades, right? The same concept, the same everything, but with more momentum, with more volume, and with more orders to fill. So this supply zone was valid. This New York high got swept. The same model that I've traded on Monday also appeared on Tuesday, but the only difference was the New York high, the trade was on New York. That's the only difference. Monday it didn't play out, Tuesday it played out. So this is the game of probability, right? One day it will play out, one day it will not. So you have to show up every single day so that you don't miss the probability of you winning. So on Tuesday it was a winning day, as you can see. Now going on Wednesday, right? So we can clearly see the H1 supply zone did got respected. We got our 1:2.75 risk to reward. The 1:3 didn't got hit, and yeah. Also, the price doesn't always make a huge move, right? So your stop loss, put your stop loss as small as possible. Meaning, your stop loss can be 6 pips, 8 pips, 5 pips, 7 pips, no problem. Make it according to how the market closes. Okay, So now we can clearly see on Wednesday, going on Wednesday, my bias is not clear because of how this candle closed. It's looking like it's going up, it's looking like it's going down, and whenever the daily bias is not clear, I tend to trade with the weekly bias. So weekly bias on DXY is bullish and GBP USD is bearish, right? So excuse me. So now going on Wednesday, my bias is clearly bearish. I didn't took the trade on Wednesday personally because GBP there was CPI, so I didn't took the trade. Maybe I would have taken this trade on Euro USD. Euro USD is cleanly bearish, right? It's going down. So GBP USD is literally making a left head and a right shoulder, but I don't trade according to that. So now going on Thursday, again I'm looking for sells because I trade with the daily bias. Daily bias is clearly looking like bearish, and it has also aligned with the weekly bias being bearish. I told you at the start of the video, Monday, Tuesday make the high of the week, Wednesday, Thursday, Friday goes to the downside, so on and so forth. Weekly profiling, right? That's exactly what's happening in the market right now. So to confirm my bias, I went to DXY. To confirm my bias on Thursday, I went to DXY. DXY is literally bullish on Wednesday, so I'm looking. My bias being bearish on GBP USD is valid. So that is when I go to the H4 again. On the H4 time frame, we can clearly see there is a break of structure. The market broken structure to the downside, change of character, break of structure. There is a fair value gap to the upside. Without wasting any time, I went to the H1 time frame because that is where I execute the trade. I don't want to overcomplicate things for me because trading is simple. You don't need to overcomplicate it. Let people do whatever they want. So the H1 fair value gap got filled. The H1 supply zone did got mitigated at our timing. This was a perfect setup. I told you, right? Whenever I'm looking for sales, I want the Asian range to either consolidate, accumulate. That's a good setup. That's even better than trending market. But the Asian range was literally to the upside, which is also not bad because our setup appeared, right? So on the M5 time frame, you can clearly see this was an AAA class setup. This was a perfect setup. As you can see, the time window from the higher time frame, lower time frame, inducement, entry signal, point of interest mitigation, everything I want to see in a trade was here. It was an M5 equilibrium entry, 1:2. We got our 1:2 risk to reward, but for a 1:3 risk to reward, we didn't got it, so I didn't consider this trade. So what I've learned trading these markets is you don't always need to put a 10 pip stop loss. If you always put a 10 pip stop loss, the market doesn't always need to go and make a 30 pip move, right? If you put a 10 pip stop loss, that means you need a 30 pip move to get a 1:3. That doesn't make sense, mate. So according to the Asian range, if the Asian range is small, like the Asian range is 30 pips, right? So that is when you want to put a smaller stop loss. And by smaller, I don't mean that just put your stop loss anywhere. No, according to the price action, you put your stop loss, but your entry should be more refined, right? if you miss an entry and the stop loss doesn't make sense, there is no need of taking the trade. So in this case, it was a 10 pip stop loss. I can guarantee you, if it was a smaller stop loss, then I could have got my 1:3. As you can see, if it was a 6 pip stop loss, I would have got it. So yeah, I will have to work on my stop loss placement. And yeah, Thursday was a winning slash break even trade because of my stop loss, and that is totally fine, right? So that is when I go to Friday now. So the last day is the last day is Friday. So Thursday will close as a bullish candle, and when I go to DXY closed as a bearish candle. As you can see, it's a Marabuzu candlestick. So on Friday I will look for buys on GBP USD and sells on DXY. I didn't trade it on Friday. Because on Friday there was both GBP and USD both news, and on this day, these days are the days where I trade EU rather than GU. These are the days where I trade EU, because whenever there is GBP and USD both news, I don't trade GBP USD, I trade Euro USD, simple as that. So this was the weekly breakdown, guys. Hope you guys learned something, and I have to work on my stop loss. Now I get the strategy, I get everything. Now all I gotta do is execute without fear. As you can see, patience, discipline, and fearless. I gotta do all of this and take the trade, simple as that. So Thursday was literally, and these are the call outs. This was the weekly breakdown for you guys. Catch you on the next video.